Hello, everyone, and welcome to the IIA's 2025 Fraud Virtual Conference. I just want to thank everybody for being here with us. You could be anywhere else in the world. You're here with us now in this moment, and we appreciate you for that. I'm Ernest Annuncicion, and I get the distinct pleasure of kicking off our event. And for this session, we're going to talk about the impact that artificial intelligence has on the fraud triangle and how you can achieve smarter prevention and sharper detection by leveraging AI technology. So let's go ahead and get the show started. Now, I want to start off by saying I am by no means a fraud expert. In fact, I personally believe that as an internal auditor, it's extremely difficult to be an expert in any one particular area. Perhaps you're a financial auditor or an IT auditor, you got an area, a specialty. But the fact of the matter is, the expectation is that we deliver value by influencing change within our respective companies. How do we drive that change? What are the things that we want to improve on? So I caveat that while I don't have a CFE or a CAMS or CFCS designation or something similar, I do have over 22 years of experience as a former chief audit executive, and then the last 10 years or so in software and development. I have done a ton of research, traded war stories, seen a lot of things throughout my career, even most recently serving as a member on the IIA's North American Board of Directors. I currently lead our product marketing function here at MindBridge, and I'm just super excited to be part of this incredible lineup of speakers that we have over the next couple of days. So let's talk quickly about the agenda. I think it's really important that we all begin with a fundamental baseline understanding of what fraud is. It's more than likely that we've got a variety of backgrounds and experiences across the audience today. Definitely people much, much smarter than I am, whether it be on the topic of fraud or artificial intelligence. So my goal is just to ensure that we're working off a shared understanding and a paradigm of fraud, and we'll accomplish that by dissecting a widely known and accepted framework called the fraud triangle. Then we'll get into a little bit of human psychology, and I'll introduce to you the notion of the Hawthorne effect. It's an extremely interesting experiment whose research origins date back to the 1920s, but even to this day, some 105 plus years later, the merits are still up for debate. From there, we'll get on to the topic du jour, artificial intelligence. And unless you've been living under a rock, AI has become all the rage over the past year and a half. And we as internal auditors need to responsibly consider the effects that it would have on the fraud triangle framework. I'll then go through a few case studies of companies that have implemented artificial intelligence and give you some tips for those of you who are seeking to leverage AI as part of your own methodologies. And then we'll wrap the session up with a few predictions, kind of where I see fraud in the future and how that's going to trend. So as for the learning objectives, look, my goals are really simple. Let's explore how fraud happens in the first place. And then we'll get into how artificial intelligence is reshaping the fight against it. And then finally, we'll look at a few practical strategies for leveraging AI to protect your organization. And by the end of this session, my hope is that you gain a little bit more insight, maybe an action item or an action step or two that could help elevate your organization's fraud protection strategies. So let's start with the basics. What is fraud? And fraud is defined as the intentional act of deception for the purpose of financial or personal gain. Pretty straightforward and simple definition, right? but it's still so extremely complicated. If you were to ask a random person on the street, do you think stealing is wrong? Hopefully, the majority of people would say yes. However, according to a study that was done by the Global Anti-Scam Alliance, they had this report that came out in 2024. They estimated that scammers have stolen over $1 trillion globally. And I'm a gambling man, so I'm willing to bet that that number is probably very conservative because you probably have a lot of people that are ashamed or embarrassed that they were victims of scam, and so they don't want to talk about it. I'll give you a personal example myself here. Every year, a group of friends of mine, we like to travel for an NFL game where the Vikings are playing somewhere else. And this year we landed on Nashville as they were playing the Titans. And so we look at ticket prices on Ticketmaster and online, and the fees are just outrageous. But it gives us a little bit of a baseline. So I take to Facebook and I start looking at different Facebook groups, and there are a lot of these organizations or groups that will buy and sell legitimately tickets. And so we found this one deal for 6 seats that were in the end zone, lower level, and started corresponding with the other person through Facebook Messenger, and we're exchanging information, and got the buy-in from my buddies, like go ahead and pull the trigger if you can. And so I was a little bit apprehensive at first, and the seller was like, look, send me a down payment. And once I receive that, I'll send you the tickets and then you can pay the remainder of the balance. And I was like, yeah, that sounds great. So I send $150 electronically through Venmo. And then all of a sudden, poof, their profile is gone. Our messages are archived. The Facebook group all of a sudden no longer exists. I can't get a refund through Venmo on it. And it was, it was a very humbling experience because my spidey senses should have been heightened from the onset. A couple of red flags that I should have noticed right away. Number one, the price point, too good to be true, right? There's that saying, if it's too good to be true, it probably is, was not aligned with market rate. Number two, I've done these transactions in the past, and we typically do it through a moderator. There's an admin to that Facebook group who acts as a broker and would do the transaction and take a certain percentage off top. And so I just clearly wasn't thinking at the time, but it just goes to show anybody is susceptible to those type of scams. But enough of the personal anecdotes. I do want to get into some of the most common types of fraud that we see in organizations today, starting with financial fraud. And this is probably one of the most common ones where, this involves manipulation of financial transactions or instruments for personal gain. And I'm taking this through the lens of an individual consumer. One of the most common things we see is credit card fraud. Scammers are looking to steal the credit card information so that they can go make purchases elsewhere. Another one that we typically see, unfortunately, is embezzlement. And this is where employees are siphoning funds from the company accounts and funneling it into their own, typically through falsifying invoices or setting up fictitious vendors. The second type that we see is identity theft. And this happens when somebody is taking another person's personal information without their consent in order to commit fraud. A lot of times these scammers are going after social security numbers. With that, they can open up new credit card accounts or new bank accounts. Um, Another thing that we've seen over the last few years is social engineering. People who are impersonating someone in order to gain access to different services or systems or benefits. When I started with MindBridge about 8 months ago, I want to say within the first week, my cell phone was blowing up with text messages. My inbox was getting flooded by emails. People who were posing as our company's CEO. And I just thought to myself, hey, I've only met with the guy once or twice since I started. Um, let me just double check. The email signatures and addresses looked off. The text messages were very poorly written, bad grammar. And so I send it off to him and I say, hey, can you verify this? And sure enough, it was not him. Now I did get his cell phone number in real life, and now I know if it is coming direct from him. But how was I to know the first couple of days? And you hear a lot of stories of C-level executives or scams that involve C-level executives, and these requests for something urgent. Hey, I need a bunch of Apple gift cards purchased for a meeting tomorrow. This is urgent. Can you take care of it? And then send me the information. So, identity theft is just again one of those things that we see pretty prevalent in the space. The next type of fraud that we see is around insurance, and this is it involves falsifying different claims, people trying to get payouts from insurance providers. This happens, unfortunately, very regularly in this industry. People that are faking, staging a car accident and trying to get claims of damages from their auto policy, or folks who are exaggerating the value of stolen items from their homeowner's insurance. The next one is corporate fraud. And probably the most common thing, and I might be dating myself here, but when I started my career in 2002, the advent of Sarbanes-Oxley, companies like WorldCom and Tyco and Enron, uh, all falsifying and misleading within their financial reports. They're falsely inflating revenue figures, trying to attract investors or boost their stock price and their valuation. Another type of common corporate fraud is insider trading. Right? We're all here as auditors, and we've been through the training on what to do, what not to do, blackout periods, but yet you still see headlines of corporate executives that are buying and selling their shares, company stock, based on non-public information. And it's just unfortunate how that still is prevalent today. The next one is around cyber fraud. This is folks who are looking to exploit technology in order to deceive individuals and businesses. You see it typically in the form of phishing scams, fake emails that are sent pretending to be some sort of trusted entity. They want to steal login credentials or account information, and then hacks. Getting hacked. I think not a week goes by that we don't hear about a data breach. And the saying, if you ask an IT security person, it's not a matter of if, but it's a matter of when. People want to get access to the data around customers or intellectual property. And the last type of fraud that I want to highlight is investment fraud. This typically involves offering some sort of false or misleading opportunity in order to deceive the investors. Most notably, Ponzi schemes where they're paying off early investors with the funds that they're getting from new investors rather than taking it from legitimate profits. Or how about pyramid schemes where you recruit three people and those three people recruit another three and those three recruit another three. You're getting participants to pay into a structure where those returns are based on recruitment rather than actual investments. And look, I understand there's probably a ton more other types of fraud that are out there. And again, I just wanted to highlight some of the more common ones that I've seen over my career. The point of the matter is that fraud can happen anywhere. Fraud can take shape and bear and rear its ugly head in almost any part of the business. And so I just wanted to get a basic understanding there. So let's take a look at what enables fraud. This fraud triangle is a framework that's used to understand and explain the factors that contribute to fraudulent behavior. It was developed by a criminologist by the name of Donald Cressy, and it identifies three key elements that have to be present in order for fraud to occur. And the first one is opportunity or the means. And what we're referring to here are the conditions or the weaknesses within an organization that allows for fraud to happen and importantly, be concealed. Now, without a perceived opportunity, even the most motivated individual may not act on their intentions. And there are some common sources of opportunity. First and foremost are around weak internal controls. A company might have inadequate policies, they lack good segregation of duties or ineffective oversight. Maybe even if you have good policies, it's not communicated effectively. Perfect example of this, think of a bookkeeper. Maybe it's your church or local nonprofit organization. That bookkeeper could be responsible for recording payments, reconciling the accounts, issuing checks, and then all of that gives them the ability to create fictitious vendors and embezzle funds. Another common source for opportunity is around a lack of monitoring. Organizations that fail to monitor high risk areas often leave gaps for these fraudsters to exploit. I think about some employees that have access to company credit cards where, they have the opportunity to make personal purchases without any detection because maybe they're not part of an expense audit or the expense audits are rare. And then the last opportunity is around just excessive trust or access. Um, there's a reason why systems have different roles and an SOD matrix about who should get access to what. But when you think about employees or vendors that have unrestricted access to various financial systems or sensitive data, they have the ability to exploit these privileges. And a common area that we see is around, an IT administrator who has access to payroll systems. They have the ability potentially to create fake employees and divert their funds, the funds into their own accounts. So that's the first angle of the triangle. The next one is around pressure, or what I like to call the motivation. You know, Pressure represents external or even internal forces that will drive an individual to consider committing fraud. These pressures can arise from anywhere, right? Personal, financial, professional challenges. And oftentimes, these individuals feel a sense of desperation or urgency that really pushes them towards that unethical action. And so, a few of the pressure points here, number one, and probably the most common, is just financial pressure. They could be excessive debt. Maybe medical bills are piling up, or perhaps they have a gambling addiction, or maybe they're trying to maintain a lifestyle beyond their means. A good example of that are employees who have mounting credit card debt, but then they're manipulating their expense reports and essentially are generating additional income. The second most common pressure point we see is work related. If you've got unrealistic performance targets or there's a sense of job insecurity or fear of missing bonuses, all of this can lead to fraudulent activities. An example that I've seen in the past are, sales managers who will inflate their sales figures in order to meet the quarterly revenue goal and therefore secure their bonus. And then the last pressure point is around personal pressure. And unfortunately, sometimes this does outweigh the others, but people have lives outside of work. They might have family obligations, they could have addictions, could be going through significant life changes, such as a divorce or a terminal illness. All of these, again, unfortunately, increase the likelihood of fraud. In fact, I had a situation where we had an employee who was a single parent and struggling. And so they were embezzling funds from the petty cash box in order to help pay for their child's education. So that's the second factor of the broad triangle. The last one is around rationalization, or what we call justification. And this refers to the mental process that fraudsters go through in order to justify their actions and then reconcile it with their own values. The psychological factor allows for them to almost see their actions as acceptable or even necessary, right? And so here's some of the common examples that I've seen. First and foremost, all right, I'm underpaid, so I deserve it. Employees who feel undervalued might see fraud as a way to kind of course correct their perceived inequity. And so, think about employees who might be skimming off the top of the register because they believe they're entitled to more pay. Another justification we hear is, oh, it's just a small amount. Nobody's gonna nobody's gonna notice. And this goes back to the notion of monitoring. And so, uh, whereas fraudsters might start with a minor act, and they think that it has no real impact, but then over the course of time, it's like a snowball effect, and it just avalanches, right? They think they can get away with it for a little bit, and then it becomes more frequent, and the amounts start growing. The last example that we typically see is around um, this notion of, well, everyone else is doing it. There might be a perception of this widespread misconduct or even a toxic culture. It can embolden individuals to justify their actions. And again, expense reports are a perfect example of it. So these are the three elements that are really key that when they're combined kind of creates this perfect storm for unethical behavior. Now, it shouldn't be a surprise to anyone that fraud is a very imminent problem. It not only affects companies, but individuals as well. I mentioned the $1 trillion earlier that are lost by people, and due to those scams. But if you do a little bit of research, the actual amounts and the impact is not really known. So, for instance, in 2023, the Federal Trade Commission had reported a $10 billion loss, which was up 9 billion from the year before. So a 10x increase from 2022. Another example is data from the Association of Certified Fraud Examiners. They suggest that businesses typically lose around 5% of their annual revenue to fraud, which means the average cost of corporate fraud is significant and can reach substantial amounts depending on the size of your company and the industry that you're in. In fact, some studies report losses as high as $42 billion globally in a single year. I think the bottom line is that the scale of fraud is growing exponentially, and fraudsters are becoming much more sophisticated and innovative. With new technologies at their disposal, we also need to innovate our own prevention and detection techniques in order to keep up. However, despite our best efforts, fraud detection and prevention, it's not easy. There are a number of challenges that we experience when it comes to this. First and foremost is going to be high volumes of data. Think about all of the systems that you have within an organization. You have an ERP, you have a payroll system, you have an inventory management system, you have a GL, all of these systems disparate, connected, disconnected, and then the transactions. You could have within financial services companies that are processing billions and billions of transactions annually. So spotting anomalies in that sea of data becomes extremely daunting. Another challenge that we have within fraud are just the techniques are evolving. Fraudsters are incredibly creative, and the schemes just constantly seem to be adapting and leveraging, things that are at their disposal in the times. Another area that is extremely challenging is around false positives. These detection systems can often flag legitimate transactions as fraudulent. We had an example. I seen a company where, they reported that over 40% of their flagged cases actually turned out to be errors. And so all that time and the resources that were spent in identifying those and reviewing the cases were pretty much just wasted. One of the other common challenges that organizations face with fraud detection is operating under tight resource limitations, whether it's budget restrictions or limited personnel, gaps in advanced technology tools, or even just a lack of expertise. These constraints can hinder the development and maintenance of robust fraud detection systems. And another critical challenge that we face is just the complexity of how do we integrate these fraud detection systems within our existing business processes and data sources. And so a lack of seamless integration can often result in fragmented data, inefficiencies in the analysis, and then ultimately delays in decision making. So, while these challenges and issues can present some significant hurdles, they're not insurmountable. I think by prioritizing efficient and scalable solutions, fostering a culture of collaboration, organizations can really overcome these challenges and build fraud detection systems that can be effective and sustainable. I think the key to that approach, is you got to be proactive and leverage innovation and partnerships in order to create that robust framework for prevention. So I talked earlier about the Hawthorne effect, and this refers to a phenomenon where individuals modify their behavior in response to being observed or being aware that they're being monitored. These studies originated and were conducted at the Hawthorne Works factory in the 1920s. And the effect highlights how people often perform better or act differently when they know they're under scrutiny. Now, if we put this in the context of organizational behavior, the concept underscores the importance of oversight and how even just the mere presence of monitoring can influence employees' actions, potentially reducing misconduct and increasing compliance with established norms. In the realm of fraud prevention, the Hawthorne effect plays a critical role. When you think about employees and vendors and other stakeholders, know that you've got a good, robust fraud system in place and that regular audits are happening, the likelihood of engaging in fraudulent activities actually decreases. Now, awareness of those monitoring tools, such as anomaly detection systems or data analytics, or many organizations have whistleblower hotlines, can often deter fraudsters as the perception and that perceived risk of being caught increases. And so, furthermore, a culture of transparency and accountability, bolstered by that visible anti-fraud measures, usually enhances the deterrence effect and again reduces the likelihood of fraudulent behavior. And I think, if organizations can leverage the principles of the Hawthorne effect, it does incrementally strengthen the prevention strategies and fosters an environment of ethical conduct. I'll give a perfect example from my background. Um, I was working for a multinational manufacturing and distribution company, and we had some fairly remote locations throughout the world. One of which was in China, immaterial to our financial statements. But the general manager of that specific plant, called me up and said, "Hey, um, we've never been audited before. I would like you to come out here and just kind of kick the tires around certain processes. But more importantly, we just want people to know that we've got this third line of defense that is looking at stuff, even though you may not see it." And so, again, I agree with the Hawthorne effect that, just by even the perception and the communication and the visibility that it has, can all help with reducing those type of fraudulent activities. So we're going to shift gears now and talk about AI-enabled oversight. And I want to introduce artificial intelligence into the equation. And from what I've seen and through conversation and case studies that we've done, look, AI is a game changer for fraud prevention. It addresses all three parts of the fraud triangle, and helps to really detect and prevent fraud much, much more effectively and efficiently. So first, starting with pressure. AI can analyze vast amounts of financial and behavioral data to identify where potential areas of fraud might be ripe, way more than what a human being could do, or the limitations of the million rows that you have in Excel. And so, again, reminding folks that pressure refers to kind of the financial, professional, or personal stresses that are driving individuals to commit fraud. Now, artificial intelligence can't directly eliminate financial or personal pressures, but it can help companies identify early warning signs of employees or stakeholders who might be under stress, and thereby allowing preemptive action to help mitigate risk. And let me give you a few examples. First, predictive analytics. Analyzing behavioral patterns in communication, patterns within expense reports or performance metrics to flag those unusual activities that might indicate that stress or financial hardship. Things like a sudden increase in expense reimbursements or the frequency of late payments. Another area is around sentiment analysis, taking a look at unstructured data, things like emails, messages, performance reviews. AI can help identify signs of dissatisfaction, frustration, or stress, reading into tone, which might be signaling an increase in fraud risk. And then you also have proactive support systems where AI insights actually help organizations design employee wellness programs or provide additional financial support initiatives to help reduce stress, indirectly addressing one of those root causes of fraud. The next area is around opportunity, and where I see AI is closing the loopholes within some of those process gaps by continuously monitoring transactions. And look, we've been talking about continuous monitoring forever, and everybody wants to get into real time. But again, that opportunity arises when the internal controls or oversight fails, and that gives people the opportunity or the means to commit fraud. AI is especially effective in reducing those opportunities by enhancing the oversight and internal controls. And let me give you a few examples here. The first one is around anomaly detection. Um, by leveraging AI for continuous monitoring of your financial transactions, things like your expense reports or even other data sets in real time, they're going to surface up and indicate potential fraud, right? It might detect duplicate invoices or unusual spending patterns, or even irregular account access attempts. Another area is with automated controls, right? AI systems can implement and enforce preventative controls automatically, such as blocking transactions that might exceed a threshold or rejecting an unapproved expense claim or flagging unauthorized system access attempts. Whenever I talk about continuous monitoring and flagging, I always go to an example of, imagine you're traveling to a remote part of the country that you normally don't go to. Let's say you're in Erie, Pennsylvania, and you go to the local hardware store and rack up a big bill. The point of sale system, along with the credit card company and financial services company and the bank, are all working in concert, and that transaction gets flagged right away and possibly declined, right, for potential fraud. That's the best example that I've given to folks. The last example of that within opportunities is the access monitoring. Actually, two more. Machine learning algorithms are incredible at identifying unusual systemic patterns or privilege misuse, such as employees accessing sensitive data outside of normal working hours, or reducing the chance of fraud through unauthorized access. And then the last one is around data integration. So AI can help consolidate data from across the organization, providing more of a holistic view of processes and transactions, which helps to reduce the blind spots and opportunities where fraud typically goes unnoticed. And then the last area is around challenging rationalization, right? It's that internal justification. It's essentially an excuse for their behavior. And while this psychological aspect is very difficult to address directly, AI does create an environment where the rationalization becomes much harder, right? It helps foster a culture of accountability and transparency. Things that I've seen are, proactive fraud education, where these AI tools can analyze a ton of historical data and provide insights into the most common fraud schemes and what the consequences are. And that helps organizations to implement targeted fraud awareness and training programs that hopefully reduce that ability to justify unethical actions. Another area is around ethics monitoring. AI-powered sentiment and behavioral analysis can detect potential ethical breaches or justifications within employee communications. Again, it's just a small invoice, nobody's or expense, nobody's going to notice. That helps organizations to intervene much earlier than what they would have done before. And then demonstrating oversight. When employees know that you've got monitoring systems that are AI enabled and activities are continuously and objectively reviewed, it creates this perception of strong oversight and hopefully deters that fraud by making it psychologically harder to rationalize. So AI just doesn't influence the individual components of that fraud triangle. It is starting to reshape that entire framework. It proactively addresses risks before they escalate. When you take into account some of the fundamental AI things like predictive insights, reducing vulnerabilities, this is really going to change the landscape of fraud prevention. Other things that I've also seen is that AI is enabling organizations to move from reactive to being proactive in their fraud risk management strategy, which ultimately leads to both the reduction of frequency and the impact of fraudulent activities. And so while the fraud triangle framework, it's an excellent and valuable tool for understanding the factors behind fraud. Artificial intelligence is offering the means to tackle these factors with unprecedented efficiency and much more precision and then a much broader scale. And so by addressing pressure, reducing opportunity, and undermining or challenging that rationalization, we're starting to see a lot of organizations be empowered to create environments where fraud is just becoming much more increasingly difficult to commit. And at this point, I do want to give an example or a case study around real-time anomaly detection. And this goes well beyond, the simplicity of just identifying deviations in data. It will provide kind of this ongoing automated means of safeguarding systems and assets from such activities. Now, this technology relies on continuous collection and analysis, processing large volumes of data. I mean, we're talking tens of millions, if not hundreds of millions, and potentially billions of transactions in order to identify irregular patterns that indicate potential fraud. Now, by using these advanced methods, things like unstructured machine learning, AI, predictive analytics, these real-time anomaly detection systems actually can adapt to the changing behavior or dynamically refine their models, which ultimately is going to improve their accuracy over time. The systems work by defining a baseline of what is considered normal behavior. And that's based on a ton of historical and real-time data. And then anything else that falls outside that baseline is flagged as a potential anomaly. Now, when you use this effectively, real-time anomaly detection can be the cornerstone for combating fraud. And that can be across various industries. A few examples, in banking and finance, we've seen it where it detects abnormal transactions like unusual withdrawal amounts or purchases in multiple locations within a shortened time frame, which could indicate credit card theft or account compromise. In e-commerce, it can spot suspicious activities such as a sudden spike in demand in order volumes from a single IP address or unusual coupon patterns. In the insurance sector, real-time anomaly detection often highlights cases where claims data appears inconsistent with the policyholder history, signaling possible fraud. Beyond just identifying these anomalies, the systems can often integrate with other automated response mechanisms, such as temporarily blocking suspicious activities, or even sending immediate alerts to fraud investigation teams. Now, this type of rapid detection and response capability, drastically reduces that time window in which the fraud occurs, and then minimizes the financial losses and potential reputational harm. Um, a lot of these systems operate in real time, but to me, I often question, what does real time mean? Is it near real time, or do you actually need to see it, like our credit card example, being denied at a remote place where you never would have traveled before, right? They are particularly valuable in high stake environments where any sort of delay in detection could have cascading consequences. So think of things like stock trading or critical infrastructure systems. One of the things I want to highlight too is the difference between machine learning and data analytics. Now, when I ran data analytics programs in the past, typically I would have to design the query and I would have to tell the query what to look for, providing parameters of, hey, I want you to flag every single transaction that was on a corporate credit card for a personal expense over $50, right? You're providing those parameters. Machine learning that's unstructured develops its own relationships between the data. And it's cross-checking across multiple different control points and is starting to develop the relationships within data amongst themselves as well as within themselves in order to surface up what those anomalies look like. And what we've seen is that organizations that adopt real-time anomaly detection are benefiting from increased operational efficiency. When you automate a very manual detection process, these systems are reducing the burden on your investigation teams, and that gives them the ability to focus on efforts which are higher risk versus manually combing through vast amounts of data, right? And then finally, the insights that you get from these real-time systems, it really helps you to understand how fraud tactics are evolving. Helping them kind of stay ahead of these sophisticated fraudsters. And so, in this era where the methods are constantly evolving, the ability to act instantly on an anomaly, it's not just an advantage, but it's a necessity for you to maintain a secure and trustworthy environment. So I want to go through a handful of benefits that we've seen so far of artificial intelligence in fraud. And I think first and foremost, it's around efficiency. Uh, you know, you can revolutionize detection with just remarkable efficiency. Unlike traditional methods where you're relying on manual labor or static rules, you can automate complex detection processes, which really helps reduce the time and the resources that are required for investigations. I'll give you an example. We've seen a leading bank where they implemented AI fraud detection and they saw a 40% reduction in the investigation time. And so, what does that do? Think about it. If you had 40% more time, where would you reallocate that? And so, they had the ability to handle vast amounts of data in real time, which really ensures that that potential fraud is identified, but more importantly, acted upon before it escalates. Another area is around accuracy. AI is excellent at identifying subtle and complex fraud patterns that often are unseen by traditional systems and by human beings. These advanced machine learning models can analyze so many data points, detect those anomalies, and uncover the hidden relationships that humans or rule-based systems might miss. An example that I saw of this was a telecom company that leveraged AI to uh, look over the subscription fraud, right? A problem that manual reviews struggled to address. They were able to recognize patterns around customer behavior, billing data, usage history, and flagging those fraudulent activities that would have otherwise just slipped through the cracks. And so this level of precision really minimizes the false positives and ensures that genuine users are not adversely impacted, which ultimately leads to more customer trust. The third benefit, I think, is around strategic insights. And so beyond just the detection, AI can provide companies with actionable insights by analyzing those trends and patterns, right? These insights help companies kind of preempt what the emerging threats are, and then you can refine your strategies proactively. An example of this, I saw a financial institution that used AI generated insights to revamp their credit risk model. And that initiative led to a 15% reduction in fraud, but also enhance their overall risk management framework. And so, again, these type of capabilities are invaluable for staying ahead of the fraudsters. And by leveraging these analytics, it really kind of future proofs their fraud detection systems and maintains a competitive advantage. And then last, certainly not least, the benefit around compliance and regulation. So when you think about highly regulated industries, healthcare, finance, compliance is a real concern. You have teams that are dedicated just to that function. And so we've seen artificial intelligence ensure tighter adherence to various regulations by automating that monitoring process and then being able to provide detailed audit trails for fraud detection activities. That not only reduces the risk of penalties, but also strengthens the company's reputation for accountability and transparency. And so I've seen instances of this or use cases around AI helping with meeting anti-money laundering and know your customer requirements. They're able to identify suspicious transactions and verify identities uh, faster than any human being could. And so integrating compliance with fraud prevention, simplifies what's already a very complex regulatory landscape and can mitigate the risk of human error. So real quickly, I want to share a case study with a customer of ours. They had a very painstaking and resource intensive process for fraud detection, especially uh, as reliant as they were on manual reviews. They were using outdated methods that not only consumed time, but it left room for undetected fraud activity. And so, again, with those constantly evolving tactics, it became more and more apparent that they wanted to become much more efficient and they needed a much more comprehensive approach. So, in order to solve this, the organization adopted MindBridge, an advanced solution capable of analyzing 100% of transactions instead of relying on sample-based auditing. Our unstructured machine learning and anomaly detection helped to pinpoint where those activities were in real time, which gave the organization the ability to act swiftly and decisively. So just to highlight some of the results from it, their detection time was reduced by 70%. In addition to that, so not just the operational efficiency, it uncovered $800,000 in previously undetected fraud. This is money that would have otherwise gone unnoticed and unrecovered. So when you think about this level of proactive fraud prevention, it aligns to some other industry findings, right? So in a 2024 report to the nations, they highlighted the fact that fraud detected proactively saves an organization an average of $400,000 per case. And again, that was just one process. So the takeaway I want to leave you with is that, leveraging AI-driven tools not only enhances efficiency, but can also potentially return significant financial returns. If you prioritize proactive fraud detection, you're not just mitigating risks, you're protecting the bottom line, fostering a culture of accountability and trust. And by analyzing every single transaction rather than relying on antiquated sampling methodologies, you're able to ensure that no suspicious activity goes unnoticed. And so I just want to remind folks that investing in advanced technology for fraud detection, it's not just about catching the fraud, but it's also about creating a future-proof strategy to stay ahead of those sophisticated threats. So we're getting to the point where, all right, everything sounds great. How do I implement this? Right. And I'm gonna offer you a few steps here to kind of help uh, put it into context. First and foremost, you got to have cross-functional teams. For internal auditors, that collaboration is key to successfully implementing not just AI, but any sort of system. Work alongside data scientists who provide insights into existing controls and key risk indicators. Partner with your cybersecurity experts. Ensure that the fraud detection accounts for evolving threat vectors, and then with business leaders who help align your AI goals with the company's organizational priorities. The next step is to assess your data availability, right? We play a pivotal role in assessing that availability because we're often well acquainted with the company's data flows in their systems. We can identify gaps in financial records, transaction logs, and compliance data that are critical for that fraud detection. Once the gaps are addressed, the AI system then is able to detect previously overlooked fraud patterns, such as duplicate invoices or vendor kickbacks. And so, by ensuring that the data is complete, it's reliable, we as auditors help build a strong foundation for effective AI implementation. The next step, you got to define your use cases. We as auditors are instrumental in defining what use cases we want to put AI technology in. And so we can draw upon our past audit findings or past fraud investigations, helping to kind of pinpoint those areas of higher risk. An example of this, I saw an airline where their internal audit team first started identifying ticket refund fraud as a significant issue based on their prior audits. And then once they had that focus, they were able to take AI, configure it to flag the unusual refund patterns, such as multiple refunds to the same account or requests that were made outside of their normal policies. That issue was addressed, and then they expanded their use of AI to tackle cargo fraud, where anomalies in shipment weights and documentation were flagged. And so that approach, it's a great land and expand. It also helps to ensure that resources are directed towards solving specific measurable problems. Step number four, you got to choose your AI techniques, right? Choosing the right technique is critical. There's no one size fits all. And internal auditors can help guide this decision by identifying the types of fraud that we want to address. For example, machine learning might be used to help identify those anomalies in high volume data sets, like duplicate journal entries or expense reimbursement fraud, flagging those based on deviations from historical spending patterns. On the other hand, you could use deep learning that can analyze unstructured data, such as contract text or signs of fraud in the procurement process, right? We had a bank, for instance, they were using machine learning to detect credit card fraud, analyzing transaction locations, spending patterns in real time, but then they're also employing deep learning to uncover identity theft by analyzing suspicious account openings. Once you've got those techniques in place, you have to train the models. And I know this is where a lot of organizations get hung up with generative AI and things that are kind of open source at this point. But if you got it in the context within your system and your company, the system is going to require robust historical data. We're uniquely positioned as auditors to help provide those relevant data sets with our audit logs, our transaction histories, or even fraud cases that we've reviewed in the past. I have an example of a payments company where they used 5 years of their historical fraud data to train their AI system. And that model was able to achieve 90% accuracy in flagging those cases by learning from past patterns. And I think the coolest thing with it is as you add on more data, the smarter it gets, right? And so think about how you're going to train it, the data that you have, and how much data you have available for it. Number six, and this is a very critical step, is integrating AI into the tools that you already have. So think about existing workflows, maybe your audit work paper system or ERP platforms. We had a company where they integrated AI into their claims processing to help find fraudulent claims. And the AI flagged claims that exceeded historical averages for similar cases or those that were submitted with suspiciously incomplete documentation. That integration really helped the auditors to focus their attention on the highest risk claims, right? And giving them much more efficiency while maintaining much more robust oversight. And then once you have everything in place, it's all about monitoring performance. You can't manage what you can't measure. Fraud tactics are constantly evolving. Uh, Auditors are in a prime position to help oversee the performance of these systems. You establish regular reviews to ensure that your models are effective. Maybe you need to add new models or tweak some algorithms. Use those findings from ongoing audits to inform the necessary updates. By continuously monitoring, updating models, we're ensuring that that system adapts to new risks and stays aligned with the organization's evolving threat landscape. So we're coming up on time, so I'll kind of be quick here. When I think about the future of fraud, um, it's very opportunistic, and I think the future of it lies within adaptive self-learning AI systems, ones that are going to continuously evolve. Think about Tesla and their self-driving cars. They continue to improve their decision making with every single mile that's driven. And fraud systems are exactly the same. They're becoming much smarter with every single transaction that they analyze. They're leveraging machine learning models that will refine themselves over time, learn from new data, evolving fraud tactics, and then getting feedback from investigations. I think the second area is that it's going to help enhance collaboration across organizations. Again, collaboration being the cornerstone of fraud prevention efforts, particularly with threats that are coming on board like synthetic identity fraud or cross-border scams that are growing much, much more complex. We're starting to see individual companies kind of pool their collective knowledge and share fraud data securely through various consortiums. And by working together, these industries are developing much more comprehensive understanding of fraud trends and injuries and creating industry-wide defenses. And then the last area is around strategic decision making. Uh, Look, we're never going to stop fraud, and it's very difficult to even prove fraud activities had occurred, but it will drive decision making at all levels within the organizational level. Just by the sheer amount of data that it can analyze historically and things in real time, I think it can help provide insights so that our leaders can make much more proactive decisions, help reduce risks, and ultimately reduce that cost, right? We're going to allow our companies to allocate resources much more efficiently, focus on those higher risk areas, and optimize our operational workflows. So, in summary, I'd like to say that fraud prevention isn't an option, right? It's not optional. It's got to be a strategic imperative. I want to challenge every single one of you to evaluate your current processes. Where are the gaps? What could AI do to strengthen them? Remember, AI isn't just a technology, it's a partner in safeguarding your organization's future. You know, Current state processes in my mind, and the reality is that it's not enough. We're still relying on outdated reactive detection processes and can't keep up with the pace of these tactics of modern fraudsters. Doing manual reviews, having rule-based systems, siloed operations, it's not sufficient anymore. And we got to address the speed and complexity of emerging risks. When you do go through and evaluate your fraud detection strategies, take a step back. Think about what you're trying to achieve. This could involve identifying weaknesses in your current systems. Where are the gaps in your data and analysis? Are your processes adaptable to new fraud trends? Are false positives draining valuable resources? You got to ask those tough questions and consider the cost of undetected fraud, which often far outweighs the investment in upgrading to more sophisticated solutions. And then finally, explore the AI capabilities. I mentioned a paradigm shift in fraud detection, the unparalleled speed, accuracy, adaptability. There's so many solutions out there. What's going to be best for your organization? What type of insights do you want to enable your organization with to anticipate and mitigate those future threats proactively? So, there's a lot of stuff out there. The future of fraud detection is bright. We're powering it with innovation, collaboration, and strategic foresight. I hope that these advancements promise not only to reduce fraud, but also to help your organization with greater confidence as that threat landscape continues to evolve. So, with that, I want to thank you so much for joining our session. Um, I want to offer up if you'd like to connect and continue the conversation, please feel free to connect with me on LinkedIn. So thank you again so much for your time. I hope you enjoy the rest of the conference. And with that, as always, stay classy, humanoids.